What is up, traders? Welcome back. September is over, how I usually start these videos. September monthly recap. Clearly this is what it's going to be. Close out the month 65,000. Really solid month. I'm happy with my performance and how I've traded this month, especially given that it's still a fall month for me. I mentioned in August that fall months typically for me in terms of seasonality are always tougher months. So pulling 65,000 out in real world money is amazing. In terms of money-wise, or numbers-wise, based on averages and how I'm trading, this is below average, but that's okay. Again, it's a tougher month. I'm happy to have come out with a month like this, and many of the goals that I set for myself, I really did well kind of following them and sticking to them, and hence why I came out with a better month than I did in August. So this video, though, this recap, I imagine will be a little bit shorter, only because when I was reviewing my month, I was going over my trades, and really these first 3 weeks here, first 3 weeks, I don't really remember many trades. I mean, for these 3 weeks, I maybe can think of one trade for you. And that was GREE on this day, which I actually already went over in a video for Stocks to Trade on their Instagram page. So if you haven't seen that, go back to their Instagram page on the 15th. I did like a 2-minute recap on this trade. Don't think I need to go over it again. Watch it there. But besides that trade, there wasn't really much lessons. There's not really much. It's almost like I was on autopilot, where I just was kind of going through the motions. Like a tough market, wasn't much opportunity. I was kind of just going through the motions. And so when I reviewed, I just thought there's not really much for me to go over here. These 2 weeks, the last 2 weeks, have so much more lessons and so much more trades that I can reflect on and learn from. And so I think you guys could do the same. So really, we're just going to go over a lot of trades from these last 2 weeks. So let's just jump right in. Let's go right into it here. CRVS. So CRVS was a bit of a more difficult runner, mainly because it wasn't moving in a way that is simple. It's maybe a little more choppier. As you can see here, every day it gapped down and then it squeezed back green. Same thing here, gap down, squeeze back green. And so, part of that means the stock has a different characteristic than what what I'm usually used to seeing. And every stock is like this. Every stock has its own personality traits that you have to find out, and some are tougher than others. CRVS was one of them. So if we go into the intraday here, I remember taking a loss on it, negative 2,700, and I believe it was this day. So it has this put out news after hours, squeezed up for the rest of the day, didn't trade it at all today. But considering now we're up from 250 all the way up to 6, that's extended enough for me. It isn't ideal that it's only one green day. I usually like 2 or 3. I usually like kind of more of a continued run over multiple days. But the fact is that the extension still was there, and I thought if this thing looked weak, I would consider shorting it. And so that's what I did. It was gapping down, and again, I don't know it's going to have this trend of gapping down and coming back green. This is, again, the second day of the run. I'm still trying to learn about it. So I think I have my trades here. Yeah, so these are all the trades we're going to go over, but this is the first one. So as you can see on this gap down, I start shorting in all these spikes. I get pretty good entries. I'm pretty patient getting into strength, and then it comes back green. So you see me cut it. Of course, it comes back red. I ignored it because I'm just thinking to myself, in the first place, of why I was hesitant to short in the first place, being that it wasn't a multi-day runner. It was only a 1 green day. So shorting on the second day is kind of just not as high odds. So immediately when I stopped out, I said, okay, you know what? This isn't working the way I thought it was. It wasn't that ideal of a setup to begin with. We're just going to ignore it. And thankfully I ignored it because it came back even again and started squeezing, and it went higher. So, we started squeezing at 5. We end up going even higher all the way up to 9 the next day. So, and luckily I ignored it. But like I said, we're looking for trend changes, right? When we see a more difficult ticker, I want to start seeing what is going to be different about this ticker sorry guys, let me put my phone down here. What is going to be different about a ticker that will make me want to short it? What about the trend is going to change that makes me want to think it's backside? Because so far, like I said, if it's gap down, come back green, gap down, come back green, and you actually see like this huge increase in volume. So I don't know if it's an algo, I don't know if it's a fund, but someone kind of created this pattern where it's like it kind of starts as a weak morning, doesn't really break down, and then all of a sudden, boom, squeeze starts, volume starts coming in, and the rest is history. So I needed to see something different. I needed to see a gap up and fail versus a gap down and squeeze. I needed to see maybe a gap down, attempt to squeeze and then fail. Like I needed to see something different. And I'm so thankful I kind of had that plan going in, because I mean, I pretty much nailed it the night before on my watch list. And my idea was one of those two things, either a gap up and fail or a gap down squeeze and the squeeze fails, right? And that's exactly what happened here. So again, another gap down, slight gap down, kind of close, almost break even open really. Pulled, didn't short any of this. None of this enticed me. Like none of this was interesting to me for the reason that it's been doing this the last 2 or 3 days. Wasn't interested. Then it squeezes, right? You see all this volume, very similar to how it was the past few days, very light volume, and then big volume comes in, okay? And what happens? It goes nowhere. It actually just breaks down not even minutes later. And so that was exactly what I was looking for. It was a squeeze, and the squeeze was failing. So that's what you see here on my trades. Let's get rid of this loss. This is when I made money on it. You immediately see I immediately start shorting, because it's never done this before where it is squeezed huge on this kind of volume that I mentioned and has gone back red, right? The squeeze has failed here. And so I immediately start reshorting. I re-add into this, or add some more into this bounce, and then I cover it all into this pull. Made $5 on it, so pretty much made double what I lost on it the other day. Just a good example. It's not a big winner either way from the amount of gains I've had on this ticker, but it's just a really good example of a more difficult ticker that might have a different personality trait, and you have to find when its trend changes that ultimately opens the door to what opportunity you're looking for, which in my case was the first red day. So really happy with that, really happy how I stayed patient, didn't lose too much on it, and then became green on it. Going to the next was MRIN. MRIN, yeah, I'm saying the ticker right. So this trade was not a normal trade that I usually take. Technically, this was a gap and crap setup, gapped up and sold off for most of the day. I don't think I ever have traded this setup. I've certainly tried, I've certainly tested it, and it's certainly profitable for some people, but like one of my biggest things that I avoid is shorting a first green day. Like it just does not make sense to me. I've seen some traders, their biggest losses come from these kind of trades. Certainly I've seen disasters if I had put myself in front of some of these tickers. So for the most part, I completely ignore it. Now, why did I take this trade though? Why did I end up making $6,000 on a trade that I just said I do not like taking? Well, there's a few factors that kind of made me change my decision. One is they put out news, and although this news seemed good, it was actually incredibly repetitive. The reality was that they put out news saying they're going to renew their contract or their agreement. They're going to renew something with Google. And so people read Google and they're like, oh my gosh, this is they have news with Google. That's amazing. The reality is the news was that they're just renewing their agreement. They've had this agreement with Google, I think for the last 3 years, if I looked at the PR right, or the filing right. Like they've had this agreement or this deal with Google for like 3 years, and they're just renewing it. So there's nothing new. Nothing is changing. Secondly, it was a formal runner. If you looked back at that daily chart, there's a bunch of resistance. Thirdly, they had an ATM. Now, ATM is a type of offering. ATM is the best because the company can sell shares at whatever price they want. There's no offering price of $8, $9, $10, where they can only sell at a certain price. The ATM, they can sell whatever price they want. And so this was a huge opportunity for that. News, having them kind of regurgitate the same news, unfortunately, or fortunately, depending on how you want to look at it, it's going to bring in volume from people who don't know any better about the news, and it's going to give the company an opportunity to have liquidity and sell shares into the market. And that's exactly what happened. I mean, you can see from the very open, it just did nothing but fade. And so if we go to my trades on it here, I immediately started shorting. I waited for it to spike because it did spike for the first minute or two. But right after it failed, I pretty much knew, okay, they're selling. Like this is acting exactly how I thought it would. You can see I'm starting to short, and I pretty much stay patient and I cover into these dips. Tried reshorting a little bit, but immediately covered it, realizing, it's just getting choppy now down here. And yeah, that was it. I'm locked in $6,000 on this trade. Again, not a trade I normally take, but again, it's about being reactive. It's about being adaptive. And I saw enough indicators around this kind of a ticker that led to me realizing I could make money on here. Like there's inefficiency here that most people don't realize. And so I did it, made $6,000. Super happy with that. Does that mean I'm going to start trading all these overextending these gap and craps? No. Like I said, it's because of the certain, indicators and things that I saw in this one that made it worth it, and it worked out. So that's really, really cool. Next one was Lucid. Lucid is a large cap. Lucid, you don't know, is like a competitor to Tesla. They make electric cars. They've come out with their new electric car, I think this year or next year. A lot of pre-orders for it, so it's popular. But again, being a large cap and going from 19 nearly to 28, a huge, like over 50% move, that's a big move. And I'm not one to trade large cap, but I am one to trade kind of overextended moves, and this is certainly one of them. And so this red day was the red day I was looking to short. If we go into the intraday, it loads here. Let me look at my trades actually. Because this is one thing, guys, I literally have to review my trades and I take pictures of them, because if I didn't take pictures, I would forget it. I actually forget my trades. So it's good I take pictures, but going into the chart here, intraday, kind of a blow off the day before, right? This is a pretty big move, like I said, for a large cap, and a pretty hard pull as well. So when when I start seeing this emotionality, this volatility, it's something I pay attention to, because it's something that then leads me to think, okay, a backside is probably coming. This is a sign of weakness. This is a sign of a trend changing, like I've been mentioning kind of this whole video so far with CRVS, now LCID. So coming out the next morning, it was actually gapping up quite large, right next to yesterday's high. So my first immediate response was, it's gapping up very large. It could go another day. It could go into the 30s, low, mid 30s. Now, my thesis immediately changed when it tried to spike, and a huge stuff. I mean, a massive, massive stuff. So anyone who bought out the open, all these millions of shares who just bought, are now underwater. And so you see here on my trade, or my chart here, I'm actually trying to short this very first bounce. You can barely see it in this chart, but this little bounce right here, I'm immediately starting to try to short. Now, I did fill some, as you can see. I do have a red candle there. I think I filled like 100 shares. So unfortunately, what I wanted was a lot of size. I got practically none of it. And so you see me covering it here, because I'm just like, I made like $200, not even. I made like 150, which is great, better than losing, but I just didn't fill. But that didn't make me think the trade was over. I still thought, right, this is the first red day, it has lower to go. That's why you start seeing me short this bounce, this very first bounce. And so we go back here. I'm shorting it all into this bounce, thinking not red green's gonna hold, but I think view up should probably stuff, which it did. That's why you see me add after it stuffed and goes back red. It pulls. I didn't cover any here, just because again I'm looking at the daily chart. I'm looking how big of a move it is for a large cap, and I'm just thinking like it should go lower. I was very convicted. So when it bounced back, I was a little bit worried. But again, stayed under VWAP. I think this little tick here back to red green is a misprint. So I just stayed patient, and it pulled, made a new lows out of that, covered it all here. Tried shorting a little bit more here, just didn't feel comfortable with anymore, covered, and faded a little bit more, but I took the meat of the move in the morning, which is what I wanted to do. What did I make? $6,000 on that trade, so happy about that as well. Now, the reason why I'm kind of going over all these wins right away, is because all these wins happened on the same day. If we go to my monthly chart here, all these wins happened here. The CRVS trade or loss was here, but I made like 3 or 4 trades or 5 trades or so, and I made $16,000, like 6K, 5K, 6K, 5K, and I just banged all these winners out. Now, the reason why I want to make that point is because every other day, which I'll go over some of these losses after I make this point, were red. Right, 4 out of the 5 days, trading days, I lost money. That's pretty rare for me, but it happens, and I'm sure it's happened. I'm not the only one it's happened to. Now, the key point to make is, though, are you green or red at the end of the month, or at the end of that week? I ended up making just under $4,000. So $4,000 isn't this amazing profit. It's not this huge thing, but it's certainly way better than losing. It's way better than being red. And so I just wanted to make the point of not only having risk reward in every individual trade, but having risk reward on a daily basis, on a weekly basis. And here, like just the point I want to make is the risk reward on a daily basis really paid out, right? When I had a green day, it was $16,000. It was the biggest green day of the month for me. All these other red days were pretty controlled, nothing over $5,000-6,000, which is only a third of, even my biggest red day being $5,500 here, is only a third of my biggest green day on this week. And so hence I come out with a green week of $4,000. Like, I can't stress that enough. Is it always going to be like this? No. There's going to be some times where, when you have 4 out of 5 red days, or 4 out of 5 days are red, sometimes, you can't help it. You're going to be red. Like, your win rate is just not going to be great. But if you can have your win rate still be awful and still come out green, you're doing something right. And I looked at my win rate this week. I won like 38% of the time. So to win 30% of the time and still come out green, my risk reward was in place. I was following my rules. I was managing my risk well. My losses were smaller than my gains. And that's why you see how it came out the way it did. So it's just a super, super important lesson. I can't tell you how many traders aren't profitable because they just don't have their risk reward in place. And that's the whole reason why I profited this week. So very, very crucial, very, very important. Just wanted to really hammer that down to make a point of it. But some of the losses I took this week, some of the losses I took a lot came from ILUS. ILUS was an OTC runner, one of the better runners we've seen in a long time. Unfortunately, I just didn't trade it well. It didn't get tough till like the last week or so up here, but this whole run here, I mean, I totally blew it. Didn't really long it in this breakout at all. Tried shorting it on this first red day and second red day. Ended up losing money, which I'll go over. Tried longing the breakout again, lost money again trying to do that. And I just kind of ignored it. Like this last 3 or 4 days of fade, I was tapping out. I was over it. I didn't want to lose any more money, so I just didn't trade it. But getting into the trades here, first was the first red day short that I was looking for. And now, what's really annoying about these lower price tickers is, well, one, the 250 rule. The 250 rule, I'm not going to go into it. You can Google it. You know, it's very easy to read and understand. But essentially, it takes up a lot of buying power for me. And so already shorting a stock under 50 cents, under $1 even, takes up a lot of buying power. It's not what I want to do. But again, it was extended, so I gave it a shot. Now, going into the chart here, this is from the second day. You can see I'm getting all short into this morning weakness. First time it went red, short into this bounce, covered in this pull, like I said, and then you just see it kind of go sideways and then just squeeze from hell. And didn't cut it on red green. I wanted to risk high day. Fortunately, not even 2 minutes later, we break high day. So you see me all these covers. But also, going into this chart, so I'm covering here. The high day from yesterday is still like 42, high 41s. So I'm thinking to myself, it still has to break that to kind of continue its run up. And as you can see here, it fails, right? It doesn't really hold the 38s, the 39s, and it kind of goes, it pulls. And so you see me re-shorting here. And I just wish I held on to this short because it came back, it held green, it came back a little bit, and you see me here, I'm pretty much putting in the top at this point. Like I'm covering right into this strength. Hasn't even broken out over 40 like it did in the morning. Still has 42 resistance from yesterday's highs. But yet I'm covering just because I think it's holding green and it's annoying and I'm over it. The issue is, again, with these lower price tickers, the commissions are very, very expensive. Longing them is cheap if you're doing an E-trade, but if you're shorting them anywhere else, most shorting brokers that allow you to short OTCs, their commissions are very expensive because they charge you per share. And so when I'm trying to short 100, 200,000 shares, the commissions add up extremely. Like they add up a lot. And so this cover and then this reshort and then this cover, I mean, I added up hundreds more in commissions than I wanted to. So very, very frustrating. I ended up keeping a very small position overnight. This cover here was only like a third of this reshort. But in hindsight, it's like I just wish I didn't cover here, right? If I didn't cover here, I would still have this same average. I would have a higher average. I'd have more shares. I wouldn't have a shitty average down here. I wouldn't have probably emotionally covered some here. So just a big lot of mistakes with this trade. And then if you go into the next day, this is the next day here. You see me trying to cover some. I only covered like a fourth that I had left. Again, it starts just going sideways, not going anywhere. And I'm like, you know what? I am so over this ticker. Like this is not breaking down. So when I got this dip, I thought I was getting out for a steal. Like I thought, like, great, they can't believe this is giving me a dip. Get me out. This is awesome. Of course, I lost sight of the big picture. It failed pretty hard. It started panicking super hard. So none of this, I didn't make no money from this panic and this short. Super difficult, super frustrating, but it is what it is. I ended up losing about 5K on it between this day and this day. Half of that 5K was just commissions. So you can see what I mean when I say I really wish I did not cover here or had to reshort here or here. Would have saved me at least $1,000, if not more. Certain not only from the commissions, but just from having a better average up here versus in here. It is what it is. It is what it is. Took a loss, made some lessons from it, learned some things from it. It is that's that. Losing money on the long side, though, I mean, every single time here, I mean, you could see it broke out a few times. Tried to break out here, tried to break out this day, broke out a little bit this day. I lost money at least 2 or 3 times on this ticker. especially going overnight. I think every time I was trying to go overnight, one being here, trying to go overnight here, panics out the open, lose money there. I think I remember trying to long it after it had this pull, thinking like, okay, it wants to break out, it's trying to break out. I ended up selling, and one of these dips just was not strong at all. I remember longing it overnight on this night, gapped up nicely, thought it was going to squeeze, didn't, ended up failing, sold there for a loss. It's just super frustrating. And like I said, by the time it was over, by the time they started panicking and started downtrending, I was over it, didn't even think about shorting it. I was like, you know what, I don't even want to touch this. And that's that. That's probably one of these days in losses. I think it might have been more of 24th, like really both 23rd and 24th. But like I said, came out green, all due to risk reward, all due to making bigger gains on the days that counted when the opportunities were there. So that's that. Going into last week, I mentioned it in the tweet that I put out about my monthly recap. Like a very small minority of my months, or of this month, was OTC profits. Usually the majority of my profits are OTCs. This month I think I made like $5,000. So 60 grand of it came from listed, which is great. I'm not complaining, but it's certainly not a regular thing for me. And I think the only reason why I even came out green on OTCs was because of CYBL. CYBL was a very similar runner to ILUS in that it kind of had a very similar daily chart. If we go back to the daily chart, ILUS, had this run up, but then kind of held up and had this really choppy breakout. And so same thing with ILUS, had this run up, had this choppy uptrend, and then it actually did break out. And so this breakout I actually made money on. Let's go back into the intraday. I longed it once it broke over that wick on that daily chart. So here's the wick into like the mid to high forwards. Longed it. I believe I didn't start longing it until later in the day. So when it broke out here, broke out over these highs, held it. I wanted to wait. After my experience with ILUS, trying to be early, trying to buy the breakout as early as I could. That didn't work for me, so I said, with CYBL, I'm going to stay much more patient. I want to really let this prove to me it's holding. And so that's what I did. I let it kind of hold all midday. Once it started perking up off this midday level right here, you can see there's a little more volume coming in. I started in, and then I bought some more as it kind of breaking out. I bought some more on this dip, and then it ramped back. And once this ramp here, when you see all this volume coming in, I pretty much was convinced that this was working. Right, this is the best I've seen it look. This is certainly the best OTC look I've seen all month, at least for my personal trades of me trading OTCs. And so I held it overnight, closed right at its highs. Next morning, sold a little bit of this pop. Looked like it was going to break high today, so I held on to it. Unfortunately, I think I have my trades here. Yeah, here we go. That's the ILUS. So yeah, you can see here ILUS sold this dip, sold this morning panics, sold right at the bottom. Those losses there, really annoying. We went over them. CYBL, like I said, right, started adding into this pops, added this dip, sold into this morning spike, and then I really thought it was going to break high day, and so I held most of my shares. Once it broke down from this morning support, I sold it. Ended up being the right sell because I ended up panicking. Small dip buy, made I think another $1,000 there. So overall, on longing this ticker for the day, or for I guess overnight on the breakout, I made about $7,000. Like I said, I'm only made like $5,000 from OTCs this month, so this trade took me green on OTCs. Can't complain about that. It's great. I'll take it. But clearly, the kind of market environment we were in is just a little bit different. Going into the last few days of the month, we're better, right? I mean, this last week pretty much doubled my month. So why was that? So we got a lot of momentum from DATS and CEI. Zach Morris and a lot of people have been longing this ticker. They've been dead on right. I mean, I don't know how right they were or how early they were in. I don't really follow them too closely. But they got a hot run out of both these tickers. And both these tickers, I don't care how high they go or how low they go. I'm just here to trade the momentum, and that's what I did. So going into, let's go over CEI first, because CEI I traded DATS because I was trading CEI. I kind of had to go do both. So if we go to the daily chart, huge run. I mean, from the beginning of September all the way to the end, it pretty much nonstop, but going up. This last day was a huge move, a lot of opportunity. Unfortunately, I screwed it up pretty badly. I can't say I screwed up that badly because I turned out green on the trade, but just how it went about was a little bit, the risk reward on this particular trade was very bad on my part. And so the reason for that being is that if we pull up my trades, let's get rid of CEI. So I took losses in the morning, right? Trying to short on a gap down, squeezed me out. Took much bigger size because it was a very AA plus trade. And so I lost 5 figures. Lost, I think, over 10 grand on 2 or 3 tries. So I think at the most I was down was about 27 grand, which you might think, holy crap, Kyle, like that's a lot of money. And yeah, I'm not denying that, but it wasn't something I wasn't prepared for. I went in today knowing that if I was wrong, I was going to lose over 5 figures. That was the risk I was willing to take. That's the risk that I push when I'm dealing with very ideal runners like I am here. So accepted the loss in the morning. Clearly see I didn't trade it the rest of the day until it started getting really, really nuts. And when it started getting really extended, I thought to myself, the more extended this gets, the harsher this pullback is going to be. And so why did I short here? Well, it's funny. I think I kind of got lucky. I got lucky in some aspects. Like I really, really thought it was going to go over $5. So when we're at the 480s here, I just didn't want to short any. I was like, no, we're gonna keep going. This is gonna keep squeezing. And I just, from practice and reading the tape, I just looked at it and I was like, this looks weak. Like this doesn't look like it can get to 5. And so I thought to myself, let me just take a starter. Let me see if it can even get over 5. And like it's a starter. Like the whole point of the starter is I can have a much wider risk and just see where it goes. And so I put that starter on, and 10 seconds after I put on that starter, just this crash, huge crash, halts down. And you know what happens next. I reopened, I shorted this bounce, panicked again, covered some into this pull here. Fortunately, I only covered about 1/4 of what I wanted to cover. I needed to cover way more. But because we did have a good bounce, I re-shorted that bounce, then covered it all into this wash. Tried one last little cover, but immediately recovered that, realizing it was a chase. It wasn't going to go much lower, and I avoided that bounce. So ended up making all my money back for the morning, and then made like plus 3 or 4 grand. But the reason why I say that risk reward is bad is because I took massive size here, lost over 20 grand, took not even 1/4 of the size here, and made back my loss, and then 3 grand. So I pretty much lost 27 and then made 30. I'm not going to complain about that. I'm very happy to be green. But again, from a risk reward standpoint, like it just irritates me, right? It's like I said, it's great to be green, but from a risk reward standpoint, I should have been making 2 or 3 to 1, not 1 to 1, and just kind of being practically break even. So it is what it is. It's a good lesson. And part of me realizes I probably shouldn't have gone as big as I did, right? If I didn't go as big as I did, I still would have gotten the same size here, regardless of the morning. And I would have made more money. So it's a good lesson. It is what it is. It's something I have to remember going in aggressive with more tickers like this, where if it's like, when I'm more aggressive, if it's not working, I shouldn't be giving it more tries. I probably should be giving it less. So like 1 or 2, I took about 3 tries here, should have taken about 2 tries. Good lesson, good thing to review on. But with DATS I actually made more money on because I hadn't had that same problem with CEI. Because I was so, you could say exhausted, or I could push myself too hard with CEI. DATS I was a little more fresh. DATS I was like, hadn't touched it yet. It was still familiar to me without having to lose any money on it. So I felt much better about it. And so when CEI started halting down, DATS never halted. So while CEI was trading, while CEI was halted, DATS was still trading. And so I had a huge advantage here. I was like, the more CEI sells off, DATS is going to follow it. And so if you go to my trades here, let's just get this smaller. If you go to DATS, you can see me start showing this bounce, because this pull you see right here is from CEI halting. So while CEI is halted, I'm shorting into this bounce. I'm like, this is going to pull more. I had a very high conviction. Didn't take a lot of size, but took a decent risk as if I was going to risk the mid 17s, and it pulled. It pulled nicely. And so the biggest mistake I made though was that when CEI started halting up, right when CEI had this halt up, when was it? I think it was here after this bounce up. I got super emotional. I lost the big picture of DATS. I lost the daily chart in mind, and you can see I just started covering. I covered like 2/3 of my shares, covered the last third here. But like I said, with my CEI trade, if we go to my CEI here, you can see here, I re-added on this bounce, right? When it halted up and reopened, I added here. Why didn't I do that on DATS? Why didn't I re-add on the same bounce here after covering it? I can't give an answer. I don't know. I wasn't thinking logically. I was too emotional. I was too afraid of giving back profits. When in reality, like if I just stuck to my original plan, you could argue I shouldn't even cover anything. Just not covered and not had to re-add, and I would have just held this longer. It would have been much more patient, it would have been much more in control. And because of these mistakes, I mean, I left like 10 grand on the table. It is what it is. It's a good lesson. And because I was emotional with it this trade, I totally kind of overlooked it the next day. So when CEI finally, not this day, but this day, when it finally had a first red day, DATS did too, right? DATS did this move, this huge panic. I didn't even short it once. And in my head, I had the same thesis I did the 2 days prior. I thought to myself, like, if CEI pulls, DATS is going to pull. Did I short DATS on this day? No. I just watched it panic without me. So again, another 5 figures I just left. It happens. So I can't beat myself up. If I added all the profits I've left on the table, I mean, I would be a billionaire. It just happens. It's part of the game. But I think not trying to improve off that is the mistake. So just mental notes I'm trying to make to go forward. Like the sympathies, you want to short the sympathies. The sympathies are generally easier than the main runners. If CEI is the main runner, DATS was the sympathy. I ended up making more money on DATS just from this one short, let alone leaving money on the table from this short and not even taking this short. So, if there's any good lesson, the sympathies are usually the better trade. So yeah, that's pretty much it, guys. Going into October, like I said, I'll go over the CEI trade I took today next month just to keep it month to month. But it's nice to start off a month up 16 grand versus last month versus September, where I only started up about 5 grand after the first 2 weeks. But again, like I mentioned on Twist, we're bringing Twist back. Me, MRIN, and Jack, we made an episode. If you haven't seen that, go check it out. I'm gonna say the same thing I said there, which is, winter trading is coming. That's usually when it picks up. Not for just me, but for generally a lot of people who are in this market or in this space. So I'm excited to see what happens. No expectations, but just how my seasonality of my personal trading has gone. This is usually the time that I kind of reach the next level. Not so much in October, but as November, as December comes around. And actually, I'll show you. Let's just look at 2020 as an example. So September 2020, really bad month, 5 grand. Profitable, yes, but considering I made 66 grand just in August in 2020 to make not even 10% of the next month, that was a harsh setback, step down a little bit. October made 43, so big increase from 5 grand. November made 59, so a nice increase from October. And then, like I just mentioned, how the summer trading or the winter trading just elevates me. I mean, I went from 59 grand in November to 222,000 in December. I mean, looking back at this makes me laugh because it's just insane. My previous best months was 70 grand. I think I made 70 grand when was it? In July of 2020, yeah, almost 80 grand. And so I practically almost tripled that in December. And of course, that was the beginning. December was the beginning of like the most insane market we've seen in OTCs. That December, and then January and February, I mean, had my career breaking months. This was right before I crossed $1 million in trading profits. So do I think it's going to be as insane as that? Maybe, maybe not. But you just get the point, hopefully I'm trying to make here, is that usually when these summer months come or these winter months come around, the opportunities are there to really push it and become the next best version of yourself, at least in trading. And that's certainly been the case for me. And so I will be, no expectations, but I'll be looking forward to see if that happens or not. Anyway, guys, thanks so much for watching. I'll catch you guys next time.